Welcome back to another podcast with Investing Education Academy. Both Leon and I, we talked about today, and we figured with everything happening in the stock market, we should kind of help you decide for yourself if dividend paying stocks are a good component for you to add to your portfolios. All that being said, just letting you all know, currently I'm on travel doing some workshops for a client, and I'm in a hotel. So this is where I am. And I say that to say the internet connection is a little spotty. So for if any reason we're disconnected, we will be back with you. If you're listening to the podcast and it's a little choppy, we apologize. Above everything else, we wanted to at least make sure we're showing up for you all. So that is our priority, even when we're on travel. With that being said, Leon can tell you why we chose today's topic, while I'll still do a little bit of housekeeping.
Today's topic is dividend paying stocks. Anyone who follows us knows that our last actually have been dividend paying. Well, they've been dividend paying stocks. So dividends have been in, and there's a reason for that, and we're going to tell you why today. So dividend had a rap because a lot of people think that they're slow growers. They don't earn you enough. You're only getting the dividend, which most times anywhere from like 2-3%. When the stock market in general is doing, sometimes can get a bad rap. I'm going to show you today why that perception is. So, of course, we always bring the data and the facts. So I'm going to cite a study from a data company, FactSet. So they did a study from 1991 to 15, and this was actually surprising to me. So in that period, I think what is that? Non-dividend paying stocks, so stocks that do not pay a dividend, returned on average for that 25, 26 year period, returned 4.1%. Non-dividend paying stocks overnight from 1991 to 2015. That do pay dividend or did pay dividend over this specific period of time, 7%. So stocks that pay a dividend over this 25, 20 returned more than double stocks that do not pay a dividend. So that flies in the fiction that dividend paying stocks are a slow grower, don't get much return. The only thing that's actually not true. And we just cited that just now. So again, I'll reiterate: 91 to 2015 paid an average of 4.1%. Returned over that 25, 26 year period. Stocks that do pay dividends returned an average of over that same period of time. Now, another main point. So that's one. I think stocks, on average, actually return more than non-dividend paying stocks. But the other important point about is the risk or the volatility. So non-dividend paying stocks that do, they actually have 41% more volatility than dividend paying stocks. So what that means, example, so say we had a company XYZ. So right now we're in a bear market. The market, say company XYZ is down 35%. That's a non-dividend paying stock in the same environment that pays, let's say 2.5-3%, would only be down maybe 18. So the dividend paying stock has considerably less downside volume than non-dividend paying stocks. So you get higher returns and less volatility. That's the holy grail of investing: less risk, bigger returns of investing. So we're here to quash the myth that dividend paying stocks and you only really get the dividend payout. That's completely false. We just, again, cited that over the past 2015, dividend paying stocks return more than double non-dividend paying stocks, percent less volatility or risk. So
Leon,
so if you're, go ahead.
Yeah, so it's gonna be a lot of people who are listening to this thinking, well, how can that be? I had whatever stock it may be, let's say Qualcomm during that time period, and they're gonna think of that single stock exposure. And we're not talking about single stock exposure here. So for those of you all who are thinking, well, I've owned Qualcomm or Nvidia or Tesla during that time period, and I'm up like 900%. So how can that be possible?
Right.
You're looking at single stock appreciation, not sector. And so you might want to kind of touch on that for those people who are thinking like that's definitely not accurate.
Yeah. So I mean, anybody that's watching or listening, like Brent said, if you're in the video, up, let's say 200% in the video, right? Your portfolio as a whole, maybe 5%, right? So that single stock is up huge, but your portfolio that has a bunch of other stuff only up, say, 25%. So that the study that I just cited is an aggregate of the entire market. We're talking about all that, essentially all the S&P 500, those 500 stocks were down big, but it averaged out over that 20 some odd year period, that non-dividend 1% return over that 25-year period. Dividend paying stocks return over that same period of time. So yeah, as Brent said, don't think about single stock. Think about a portfolio, which is the S&P 500, and that's what we're citing. We're using that as our baseline scenario. This is where that's not the case. Yeah, of course. I mean, this is a study of the general market. So we're just showing you what over this last 26 or actually it's probably more like almost 30, but the study is through 2015. So over that period of time, it's an aggregate of the entire market versus. That's why it's a study of it's more of a generality than a specific case. Out here looking for something to buy in this terrible market. Dividend paying. I mean, that's really what I'm looking at right now myself, is mostly dividend paying stocks. If I'm buying anything at all, as we've said many times before, when you own a dividend paying stock and the stock goes down, are padded by that dividend. Because if it pays 3% for the year, the stock is down. Well, let's say it pays 4% on the year, you're still up 2%, because by the end of the year, you're going to get that to pad that loss, and you're going to net out 2%. So in this type of market, dividend stocks are great. And then once you turn around, at some point they'll also pad gains. So if you look at dividend paying stocks, if you're looking for anything to buy.
Yep. So I mean, our message is really short today for you all who are thinking like, what do I do in this market? What is the story behind dividend paying stocks? This is the information we have for you. Now, again, I'm on travel, so the internet connection may be a little spotty for some of you all. So do your best. I know there have been pieces going in and out, but overall, for those of you all who've been thinking again what to do, dividend paying stocks are a great option. Are we saying that's a great option and everyone should have dividend paying stocks in their portfolio? I don't know. That's something that each person needs to decide for themselves. And also, when you're deciding it, you have to look at what is your investment objective, what is your overall asset allocation look like, basically what is your suitability. All of those things matter. And then not all dividends are made equal. So, when you're looking at dividend paying stocks, like what is the dividend payout? Because it may have a really weak dividend payout, but it's a really steady company. Vice versa, it may have a very strong dividend payout, but the stock price fluctuates tremendously and you don't feel comfortable with the fluctuation in stock price. Consider all things when you're looking at dividends. We can go into dividend. I mean, we can go way deep into dividends because we do. And we have had some experiences with dividend paying stocks. That's not for this particular podcast. But if you all are interested in knowing what some of our experiences would have been with really high dividend paying stocks or really low but steady ones, send us a direct message and we'll do what we can to talk to you about it. Or you can always join Investing Education Academy. We're growing. We welcome new members. We're going into Q3 of the year. Some of you all are thinking like, okay, you know what? We might be somewhere near the bottom of the market. Now is when I want to invest. I didn't want to invest before. I wasn't sure what's going to happen. No one's guaranteeing this is the bottom because you never know until it's over. But this is a really low point relative to where it was, this time last year. I am curious about getting into the market, which I would love to say publicly, Leon and I have recently brought on, I can't say a new member, but someone has engaged us who is an actor in the Marvel series in addition to Apple TV. And that is super amazing that, you know, actors and actresses are listening to these podcasts and contacting us and hiring us to help them with their portfolios. So shout out to those who know who you are. That's super dope. And
Yeah, we've
you
been told
know,
we can't say the show, we can't say who they are, where they are, but
yeah,
it will kind of perk. Yeah.
yeah, we basically have an NDA on it, but nonetheless,
Yeah.
it was super dope. And we also have people in other countries contacting us now. And you know, to have somebody call you from somewhere else and they want to get your advice on like what's going on with the market in your portfolio, it's just amazing that we're starting to grow to that place. Again, if it's your family, if you're doing a family reunion, if you have an event coming up and you're like, you know what, I want to switch things up. Instead of throwing a party, I want to do a financial literacy event. And you want to hire Leon and I to come out and speak at your financial literacy event, cool. We will also be speaking, and we can say this at the, I should know the full name, but it's the conference for, yeah, more information to come. But it's a conference for eye surgeons, and we're actually going to be speaking at this conference. IEA will be represented at this conference, speaking on financial literacy to a community of over 200 plus eye surgeons. So it's some very real things happening in Investing Education Academy. I hope you're a part of it. If you're not, please think about membership or join some community right in the market. Not even right now, in the market. There's so many things you miss by not being part of a bigger community. If it's ours, great. If it's one of our colleagues, I'm not saying competitors, because we love those who spread the right information to people about financial literacy. We just want you to be part of a community because you may think you can do it all on your own. 5 years from now, you're going to really wonder where were you during this time period because millionaires will be made. And when actors from Marvel are contacting you saying, look, I want you to check out our portfolio and just give us your advice, that's dope. And when you get contacted by a conference with like 300 plus eye surgeons to come in and speak, that's amazing. And so, you know, people are using this information, but we hope it's the everyday mom and pop person who's like, you know what, I want to prepare for my life before retirement and I want to get my kids right. That's why we started, although we are definitely happy to help out some of these other people who are contacting us. So with that being said,
And
overall the message is
wait,
thank you.
yep, everything I ditto everything Brent said. But one point that's one I want to make about dividend paying. Buy dividend paying stocks blindly, right? Just because it pays 3, 4, 5%, don't just buy it. Be like my famous example that I always use, Walgreens. Walgreens actually just raised this last quarter, I believe. I think they pay above 4%, 3 or 4%. They have a pretty high dividend. The stock, if you were in the stock over the last 3, 4 years, you've lost. So this is where we always say, do your own research. Always research the company, the stock. It's fine. Don't buy blindly just because it pays a high dividend. Walgreens is a good example. If you were in that stock, a lot of money. So you want to buy. I can't even say the company, but for whatever reason, I haven't done the research. But for whatever reason, the market does not have years. So again, do your own research. Don't buy blindly just because of dividends. But as we pointed out today, quality companies that pay a dividend, you can actually more than double your return stated amount of time. So definitely look at dividend paying stocks.
Yeah, everybody, thank you for being with us. If you're looking at ways to join Investing Education Academy, you can go to www.ieanow.com, become a member. You can go straight to ieamembers.com to join our membership platform. It's a lot going on, and there are millionaires being made. Hopefully, you're part of it. If you're not, in 6, 7 years when you're listening to these, you might regret it. You might be cool where you are. It's, totally your call. But with that being said, we thank you for today. If you're listening to the podcast, please subscribe, continue listening, and we hope to see you next week. Have a good day, everyone.